Hey, what's going on, guys? Daniel here. In this video, I'm going to be talking about the PDRA matrix and some real hidden gems from ICT and some real sauce. So before we get into the video, be sure to follow me on X, join my Discord, and leave a subscribe if you like the video. Alright, so what we have here is so-called the PDRA matrix. So as I have read in here, there is a green box, a red box, equilibrium, and there is some PD arrays right here in order, all right? So the first one says old high, rejection block, bearish order block, fair value gap, liquidity void, bearish breaker, mitigation block. And then going to the red section, mitigation block, breaker, liquidity void, fair value gap, bearish, this should be bullish order block, rejection block, and old low, right? And we have equilibrium here. So what this is the PDRA matrix, but this is so helpful. This has opened my eyes so much, but this took me a lot to get this, all right? So I want you to focus, and I want you to understand this. You have to know the basic PDRAs of ICT, and you have to know at least a couple months or at least a year of ICT to understand this. All right, so with the help of PDRA matrix, you can also this could help you find the breakaway gaps. Yeah. So with the help of this tool right here, this order right here, you can get to know when the breakaway gaps appear, or when a fair value gap is going to be a breakaway gap. All right. So this right here looks just like this, all right? So I want you to listen to this very carefully. Every dealing range, all right? A dealing range, this is a dealing range, all right? Every dealing range should have these PDRAs, all right? So this one is a old high, a rejection block, order block. These two are the same, these two are the same. Mitigation block and breaker block, the only difference is a breaker block in a bearish scenario, a breaker block does this, and a mitigation block does this. Right? So it's just the failure swing that is the difference right here between a mitigation block and a breaker block. So these two, you can state both of them as one. These two, they're both one. Liquidity void and fair value gap, they're both the same also. Bearish order block and rejection block, these three are three different PDRAs. Oops. All right, so what I was about to say was every dealing range, you should have all these PDRAs. You should have all these PDRAs in a dealing range. If not, go backtest it, go study. When a dealing range does not have this order right here, and see what happens. All right, you can't just sell or buy the inversions. If you ever have noticed something like this, when price goes up aggressively, comes down aggressively, and there is a lot of gaps, there is a lot of fair value gaps, and they get inverted. And what you're gonna do is you wait for price to retrace and you sell here. But what tends to happen is it just goes and hits your stop. Why? Because this was just a manipulation slash retracement. A retracement is a manipulation. So this right here, this price movement right here is a manipulation. And you don't want to be participating in the manipulation move. You want to get the continuations. Because if you sell here or if you buy here, you're going to get wrecked. So what you want to participate in is a price action like this, a dealing range like this, because this is where price continues. All right, price continues in a price formation like this. Price never leaves you. This is why you get FOMO. This is why it's because you don't understand the PD array matrix. Before price rallies or drops, it needs to get back to one of these levels. This is when you don't sell the dip. This is when you don't sell the bottom and buy the top. When you understand this, and I'm going to be teaching you this in this video. It might going to be a long video, but it opened my eyes and it should open yours as well. Right? So I want you to remember this formation, and I want you to see it as candles. I couldn't like bring any candles, but I'm going to try to find some examples in the charts. But let's focus on the first one. All right, so this is in a when we shift to a sell program, and this is our shift in market structure. All right, so let's say this is our old high. All right, and this is our rejection block. I didn't state it, but let me just write it real quick. Sorry about that. Rejection block, old high rejection block, order block, void slash FVG breaker slash mitigation block. All right. So this is the formation. Every dealing range has, this is like this have, every dealing range have to have this, right? It has to have this, every dealing range. So what price can do is a lot of scenarios. It depends on the price, depends on how bearish, how weak, and how fast price wants to go to its objective. All right, so let's say price is very stable, the volume is perfect. All right, everything is perfect, no hurry, no nothing. All right, so price just gave us a market structure shift right here. All right, let's say this was an intermediate term low. Price goes up, takes out liquidity, moves aggressively down with displacement, takes out the order block, takes out the swing low. All right, and now you want to sell, but where do you want to sell? All right, where do you want to sell? So these PD arrays, they're like walls, right? They're just like walls, like this. We have how many of them? 1, 2, 3, 4. We have 4 of them, right? So in order for price to go lower, it needs to come and fill one of them, right? Either it's the breaker or the mitigation, or the fair value gap and the liquidity void, or the order block, or the rejection block. So it's something like this. Price wants to get through here, breaks this one, right? It's like a ball. Let me get the ball. All right, so it's just like this. Price hits this, hits, this breaks. So this bouncy ball, where can it bounce off again off this wall, right? If not, it's gonna break this. What if it breaks this? Then it needs to bounce off this wall. All right. So let's say this is price. The breaker and the void is a wall. Price won't leave you. If it does, it will come back and fill you and then go to continue lower. It won't. Without this formation, price won't leave you. It have like it's very it's obligatory for price to come back to one of these PD arrays. All right. So let's say this ball is the is price. All right. What price can do is come here, right? Come here into the breaker and the void, barely touch it, and then move lower. This is one scenario. As I said, as I stated before, it depends on the market's condition, depends on the volume, depends on how fast the algorithm wants to go to its objective. All these depends. All right, and it also depends on the formation of the dealing range, because it's not always we get this perfect formation. We could get the breaker right here and a fair value gap right here and balanced price range right here. You know what I mean? So in this scenario, we might not see as such a big retracement to the upside. All right, so we're gonna come here and we're gonna drop. This is one scenario. Another one is we're gonna come up, we're gonna inverse even the fair value gap right here. This is where you buy, but this is where you're gonna be wrong. We're gonna inverse the fair value gap, but we're gonna respect the high of the breaker or the mitigation block. All right, so I want to add some. All right, so this is our breaker slash mitigation block. This is where it inverses the breaker. No, I mean the fair value gap. This is where you're not gonna buy right here, my friend. This is very unprofessional. Why? Because you have the mean threshold of the order block that could hold, and the mean threshold of the order block aligns with the high of the breaker block. So even though we inverse this, you should not buy. You're still bearish. All right, you're still bearish. All right, so another point is the rejection block. All right, so let's say price comes here. Let's say price goes, comes here, and then drops. This is another wall. This is where price could bounce off of, right? This is the wall. Yeah, you're right. It broke one wall, two wall, three walls, but we still have this one left. So rejection block is my least favorite PD array to use. The only times I'm using a rejection block is when it aligns with an SMT. All right, so let's say this is NQ and we're having an SMT with ES. So this is the only time I'm going to be using and watching and having my eyes on the rejection block. This is the only time when we have an SMT. All right, so this is very like advanced type shit stuff because it's not easy to understand, but the ones who understand me, they know what I'm talking about. The ones who knows ICT very well, they're gonna understand me very well. And the ones that only trades inversion, they're not gonna understand me very well. All right, so let's say let's change the formation. This is a perfect formation, but let's say we have the breaker here, right? And we have the void, just right here, and we have a couple of order blocks like this, right? Because all these up close candles is going to be an order block. All right, so let's say price is just right here, and you have your sell limit in this fair value gap, and let's say you have your stop here, and you're targeting equal lows or something. But what price does is goes up, fills the breaker and the order block, and leaves you behind. All right, so this is what price is going to do. Goes up, goes to the breaker and the mitigation and the order block, and we have some balanced price range right here. We have efficient price, right? We don't have any fair value gap right here. All the wicks are met, everything is balanced, and we have a fair value gap here and the rejection block and the order block. So what price most likely is going to do right here is go to the breaker and the order block, and then go lower and leave you behind, because price does not need to fill this fair value gap or liquidity void right here, since we have a breaker lower, right? We have a strong wall lower, right? We have two walls, the order block and the breaker block. So we have two walls together on top of each other, and the other walls, it's for the ball to go through this this wall right here is going to be pretty difficult, right? It's going to be difficult to break this and then go fill the fair value gap and then go lower. So this is all in anticipation. And one more thing is, go look. Okay, this is for you. Go take a look at every reversals and every continuation, like every big pretty moves. Go look at them and look how slow price is. Price is gonna be slow, right? Price is gonna be slow. Price is because smart money needs to accumulate their orders. They need to pair their orders. So it's not like this, you know. It's gonna be something like this, right? Depends on the time frame, depends on the scenario. In this scenario right here, this is the accumulation, or this could be the smart the stage of distribution, the silver bullet, right? But what I want you to do is, I want you to go, and you can take a screenshot of this, of course. I don't know if you understand this, but it should be very clear. This is a dealing range, right? This is the dealing range right here. We have null high, rejection, order block, breaker block, liquidity void. And now going back to this right here, and if we place numbers, all right? So this will be number 1, 2, 3, 4, and 5. So price most likely is going to reverse from either one of them. All right? So why using the rejection block is my least favorite PD array is because of, look at the number, it's 4. So in order for price to go this high, it needs to go through 1, 2, 3, right? It needs to go through 1, 2, 3, 4, 5. But we're counting these two as 1 and these two as 1. This is as 1, this is as 1, and this is as 1. So price, in order for price to reject off of the rejection block is not such a high probable, because it's so up high. I don't know how to say it, but in the list, let's say this is the list, right? It's right here. You want to use number 1, number 2, and sometimes 3. If number 3 pairs and aligns with number 2 and 1, this is where you also use number 3. All right, so my least favorite PD arrays are number 3 and 4. Order block and break and rejection block. Why? Because they're so up in the list. The same thing with the bullish scenario below equilibrium. On our bullish dealing range, we have number 1, number 2, number 3, number 4, and 5. I don't have any interest in the rejection block unless it's an SMT. So my focus will be on the mitigation block and the bearish breaker and fair value gap. These two, if these two aligns with each other, they're perfect. All right, this is very strong, the best PD arrays you can get right there. All right, and let's talk about the breakaway gaps I was talking about. So this, you see how the fair value gap is right here, It's on number 2. So if price wants to be fast, if price is in a hurry, or if price is very bearish, what price is going to do is just gonna fill the breaker. Doesn't need to fill the fair value gap and the liquidity void and all these stuff. So this is when price is very in a hurry. Very in a hurry. All right, so I'm gonna try to find some beautiful examples. All right, just right here. All right. So what do we have here? High, low, higher, high. This is a mitigation block, fair value gap, an order block, old low, rejection block. All right. So my dealing range is here. Okay. And high, low, higher, high. You see this right here? Let's see if that's an SMT. Nah, barely. All right. So this right here is our mitigation block, our order block, fair value gap, old low, rejection block. So what can price do? This is my dealing range. All right. So price needs to come back to discount, as well as the fair value gap, as well as the order block. You see how the order block is so low right here? And we have this right here. And I want you to also ask one more thing, right? This, because I saw this gap right here. So ICT got a lot of PD arrays. We got the volume imbalance, we got the gap, we got the vacuum block, we got the reapers, we got the inversion. But I want you to ask, why was none of that on the PD array matrix? It is because every dealing range, this is the order of the dealing. This is 100%. Every dealing range has these PD arrays 100%. Price cannot leave without this type of order PD arrays, which is the all low rejection block, mitigation slash breaker order block, all low fair value gap. So this is the 100. Price can crack sometimes and leave a volume imbalance right here, or it can align with a reaper, but no. The thing is, the guaranteed dealing range is these PD arrays right here. This is why ICT taught us these the most, because these PD arrays, these are what you see all the time, and this is what is going to be in a dealing range all the time, no matter what. And price cannot reverse or make a big or a quick or a continuation without such an order of a dealing range. Go back test it. You see this dealing range? This is beautiful. We got the old eye, order block, mitigation block, fair value gap, breaker block, high low, higher high low. You see that? You see how price can reverse from one of these PD arrays. We saw some reaction right here. Okay, we go up. We got the order block. We go down, low, high, lower low, mitigation block. You must say this is not a lower low, but look at the bodies. Fair value gap, mitigation block, old high, rejection block. This is very beautiful. Look, this is our dealing range. This is our dealing range. This is our dealing range. Look at every dealing range. There must be one of them. All of these must align in the dealing range. So when you trade outside the dealing range, this is when your losses come into play. So for NQ, what I'm waiting for is, I want to buy here. I want to sell here in the dealing range. Here I'm in premium. I'm also in the CB high as I marked out. You see this? So on price, since we're in premium in the dealing range, I want to see bearish movement off of here with low resistance, liquidity runs. and I want to come to the discount of the range. I want to come to the mitigation block. I want to come to the fair value gap, and I don't want this order block to be filled, to be touched. Why? Because see how low it is, and also we just mitigated this one. We just tapped it. So I don't want price to come back here. Where I want price is here is very perfect. Or the next day, open, beautiful power of 3 to the upside. All right, so open, low, high, and close. All right. Price here needs to accumulate. Smart money needs to accumulate their buy orders. You know how many people bought here? How many people bought here? Bought here? Why? Because they trade breakouts. This is a breakout. Okay, so since this is a breakout, they're now in profit. They were in profit. All right, so they were in profit for 1, 2, and 3 days. Now they're either on break even, big loss, or stopped out. So this is where smart money buys from retail. This is when smart money buys from us, from me and you. All right, so they buy from us here. Why? Because it's in a discount of the dealing range, right? Almost. Discount of the dealing range, and we have fair value gap. So this is where price engineers liquidity at the same times offers smart money to buy more, and smart money sells out their positions right here and buys their positions right here. Let's go to the 1 minute. This video is going to be very long, 26 minute. If you stayed with me until now, very good. So I want to go to a beautiful, 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 beautiful price action. Look at this, my friend. What is this? This is a fair value gap. What is this? This is a buy side liquidity that was taken out. Okay, so I'm gonna show you one gem, one time. Look at that level right here. Oops, what was that? I just. So this is when you know. This is how you know and determine high probability liquidity sweeps, and not liquidity engineers, right? So this right here for me is engineering liquidity. This is the real sweep for me. And look at this, my friend. What is this? I want you to go and study the 2022 model, episode 12 of ICT. This low made a higher high, made buy side run, right? So this low is an intermediate term low. When an intermediate term low, oh my God, this is so beautiful, gets wrecked like this, you know what that is? That's a high probability market structure shift, my friend. High, low, higher high, lower low. What is this, my friend? You know, price never leaves you behind, as I said. This is very beautiful price action, my friend. Very beautiful. What we have here, right? So we have sell side liquidity resting below here. Perfect sell model. So price either, okay, let's go to the maybe 3 minutes. I want to see a, okay, so right here we have the breaker, market structure shift, beautiful liquidity sweep. So price does not leave you, my friend. You see, price comes up to this rejection block. Okay, this is a nice, this rejection block, I like to use this one. This is one that I like to use, right? This rejection block. So you see how the breaker is respected? You see how we violated it by the wicks, but closed below. This, my friend, this is where you sell immediately. This is where you sell, and this is where the very high probable trades are, and your stop's going to be above here, and your target is going to be here. right? Let's see what we have on the 1 minute. Okay, so this is what I was talking about. Imagine how many people took the inversion trade right here. Right here, stop here, targeting up. They got wrecked. You know why? Because they don't know the PDRE matrix. Which inversion I'm using is this inversion right here. This is what you want to use. Why? Because this was your dealing range from this low to this high. When this gets break and the market structure shift and the breaker, all right, so where's your first presented fair value gap in the dealing range? It's not here, it's here. So this inversion is what I'm using. You see how the body is respected so beautifully? And this inversion is also in the breaker. Right here, I'm not focusing on discount and premium. I'm just focusing on the PD arrays. All right, buddy. And we just go down. Why? Because we are in the premium of the big range. So I think I'm gonna stop here. Like, I would love to continue, but I can't because of the time. It's gonna be so long. And man, I love this shit. All credits to ICT, the man. Um, so if you enjoyed the video, if you learned something new, if you want me to continue, let me know in the comments. Leave a subscribe. Follow me on X. Join my Discord channel. And I hope you find this video helpful and you learned something new. Until next time, trade safe.